Hey everybody, Courtney Smith here with our October 4th edition of Wall Street Winners. And this is the October 4th edition of our disclaimer. Well, you know, my motto is often wrong but never in doubt. But this time, this week, I'm going to weasel just a little bit. So let's get right into it. So the price action is awful, really awful. But the purple predictor did not make a new low, even though the price did. The big rally on Friday helped make the RSI also not make a new low. So price action is awful, but not as awful as it looks. Over here in the Dow, similar situation, but here we saw an increase in selling pressure. Not surprising, of course. And we saw a decrease in buying pressure. The NASDAQ, purple predictor, not bearish. Price action is bearish. There's no question about it. We had left a gap 3 weeks ago, and we're making lower lows and lower highs. By definition, that's a bear market. Now, the other definition is it's going to drop 20%. I don't see that happening, but we have to respect that price action. Right now, we're neutral on the seasonality indicator that we have, and we're neutral on our utilities as well. But this is bullish. Take a look at the purple line or the red line. Those are the two best scenarios, but the purple line has been the best so far. And look, it's going up. Maybe a little dip in the latter half of October, and then another strong thing. So we're seeing seasonality is coming in to support this market. Asset allocation, kind of a mixed bag. We got some bond purchasers to sell their bonds and buy stock, and then later in the week, we gave it all back. Our RISKDICATOR, though, stronger. Interesting to me that the market would be down and our RISKDICATOR would be up. Very interesting. Not happened very often. Global shares, no big deal. We had a big, sharp increase in the yield curve. And now the interesting thing is here, generally speaking, that's a bit bullish. But because it was caused by fears of inflation and fiscal mismanagement, it didn't help out the market this week at all. Bonds, of course, collapsed as we told you that they would. We're seeing some stability here. And I think we're going to still see some stability over the short run, and that'll help out the stock market as well. They did not like the drop in bonds. Bond key factors, though, still the pressure's on for higher yields, so I'm not giving up on my bearish sentiment, which has worked out perfectly so far for you. The dollar strong, as I told you it would be. Of course, you're here because I'm telling you the facts before they happen. Gold had a nice rally on Thursday, but still in a bear market. Gold key indicators, 2 out of 3 are bearish, and even the one that's bullish is not that bullish. Crude oil's got up to where we told you that it would get up to. I think we're going to stall here now. We're starting to see fears in the oil market about China slowing economy, particularly manufacturing, not so much service, but manufacturing. But here's the deal. The real reason why oil is up is because of the shortage of nat gas. And so as a result, particularly in Europe, there's a massive shortage of natural gas because, of course, renewables couldn't keep up with the demand. So now there's a shortage of, they had to shift back over to fossil fuels, particularly nat gas. And so, you know, we're going into winter, so summer in Europe, sunshine in Europe, in Northern Europe in the winter, no, not really. It's pretty gray up there. So we're not going to get any sun. We might get some wind, but it's still a peanut. So they screwed it up by shifting over to the renewables without maintaining the fossil fuels as a backup. So they're short. And what that means then is that people are shifting back to crude oil, which is not clean compared to natural gas. And so it's just a screw up all over the place. But that's why we're seeing oil up. Not really the fundamentals of oil itself, but because of the fundamentals of nat gas. Bitcoin had a nice rally on Friday. But I'm really I'm just, to me, it's boring. I shouldn't say it's boring. It's definitely not boring. But unless we break that high up there at 52,000 or break the low down at, 39,000, I'm going to stand aside. Purple Predictor says we'll probably break out on the upside. So if I had a bias, I would rather be a buyer than a seller of Bitcoin when we break through the highs up there at 52. So we'll keep a close eye on this for you. All right, everybody. Thanks, Freebie. We love having you here. But of course, you really should be subscribing to the fully paid up member version and get specific trade recommendations plus additional great analysis.